Welcome to the latest in the series of videos on the basics of Forex. In the first part of the video, we're going to take a look at the cost of holding a Forex position. We're also going to look at the most traded currencies in the world, the most traded currency pairs in the world. So do keep watching to the end of the video to learn about those. Hello, I'm Peter Martin with Trading 212, and we add videos about trading the financial markets to YouTube regularly. If you haven't already, make sure you subscribe to our YouTube channel because then you'll know whenever we add fresh content. Well, in our previous video, we looked at some trading examples of going long a Forex pair and going short. What you also need to take into account when you're trading a Forex position is the cost of holding the position. So what we're going to do is we're going to start off by looking at the pound against the US dollar, talk a little bit about that, and then use that as our starting point to explore this other facet of holding a Forex position. The US dollar versus the British pound is one of the most popular currency pairs. As we established in some of our earlier videos, the three-letter code for the US dollar is USD, and the three-letter code for the pound is GBP. And so we write dollar against the pound as USD/GBP like that. And the nickname for the currency pair is cable, and that's a term that dates all the way back to the 19th century. It's derived from when the pound against the dollar exchange rates were first being transmitted across the Atlantic by telegraphic cable on the seabed. On FX desks and trading floors, cable is a very common slang term for GBP USD. And cable is the most traded currency pair after euro dollar and dollar yen. Euro dollar is the most traded, dollar yen holds the number 2 spot, and cable is in third place. So let's now quickly run through an example of a cable trade, and let's look at buying the pound against the dollar. So let's say this is the way the bid-offer spread is looking, and that you decide to buy 2,000 at that offer price. So you're buying 2,000 at 1.21185. And as always, that's 2,000 of the first named currency, which is pounds. So you're buying 2,000 pounds. So having bought 2,000 pounds of cable, what does that mean in terms of price movements? Well, I've written the exchange rate here with the 5 smaller than the other numbers to show that that is the number of fractional pips or micro pips as we introduced in one of our earlier videos in this series. And if we had a change in this decimal place, that would be a change in 1 pip if it moved up by 1 number. So 1 pip is, as it is for so many other currency pairs, 0.0001. And that is for cable, dollars per pound. So if we multiply our 2,000 pound deal size by the value of 1 pip, that will show us what 1 pip movement will mean for our deal size. So 2,000 pounds multiplied by $0.0001 per pound. 0.1 here would have been a tenth. This would be a hundredth, a thousandth. So this is a 10,000th. So 2,000 multiplied by 1/10,000th should equal $0.2, or as I've written here, 20 cents per pip movement. And let's now say that 6 days later, the price has changed, and this is what the bid offer is looking like. So you decide to close your position. You do that by selling at the bid. You sell 2,000 pounds to close your position, the same size as you have open. So you sell 2,000 pounds at 1.22235 to close. So as we just said, our closing level is 1.22235. and our opening level was 1.21185. So if we subtract the opening level from the closing level, we can work out a number of pips that we made. We know how much we should have been making for each pip, and therefore we can work out our profit. So if we look at these numbers, these 5s, we subtract 5 from 5, just going to give us 0, so we can ignore that. If we put a line down here, we know that 1.2 subtracted from 1.2 is going to be 0, so we can ignore that. But really, we're just looking at 223 pips minus 118 pips, and that gives us a difference of 105 pips. And we said before that 1 pip was 20 cents, or 0.2 of a dollar, multiplied by 105, And therefore, overall, that is $21 difference between our opening and closing level in terms of trading profit. So we made a $21 trading profit. But we also need to take into account the cost of holding the position. So let's quickly look in Trading 212's web app now at how we can easily find out what is called the swap cost for pound against the US dollar. So here we are in Trading 212's web app, and we're looking at a chart of pound against dollar cable. And what I'm going to do is go over to this eye icon in the top right hand corner for instrument details and click on that. And then what we're interested in are these swap costs here, these swap charges. There's a short position swap and a long position swap. Now we had a long position, so it's the long position swap that we're interested in. And we can see that the value there is minus 0.0000081. So the long position swap value, as we just said, was 0.0000081. And this is a cost in dollars per pound that you hold in terms of position size. So let's assume that this is constant for each of the 6 days that you held the position. And so the total swap charge is 6 days multiplied by that daily charge multiplied by the 2,000 pound quantity. And those numbers will work out as 97 cents. So we still made a profit overall, just slightly less than the amount we arrived at just by looking at the opening and closing levels. Now we've talked a little bit about euro dollar, about dollar yen, and now about cable in this series of videos. And these are three of what we call the major currency pairs. So let's round this out by first looking at what are the major currencies and then looking at what are the major currency pairs. Before we move on to the major currency pairs, let's first take a look at what are considered the major currencies with this list of the most traded currencies in the world. And this is based on the findings of the 2016 Triennial Central Bank Survey. It shows the rankings of these currencies by market turnover. In first place, we have the US dollar, far and away the world's most traded currency. That goes hand in hand with its status as the global reserve currency. We've already talked about the US dollar. We know that its three-letter ISO code is USD. Euro is in second place. We've already looked at its code in previous videos being EUR. Similarly for the Japanese yen, which is in third place, we know that the code is JPY. And in fourth place, as we talked about earlier in this video, the code is GBP. Now in fifth place, a currency we haven't looked at yet in this series is the Australian dollar, and its code is AUD. The Canadian dollar in sixth place, and its three-letter code is CAD. And then in seventh place, we have the Swiss franc, and its ISO code is CHF. All these currencies have in common that they have large economies. For example, the US dollar is the world's largest economy, and they're all currencies for politically stable countries, or in the case of the euro, a politically stable economic area. And our major currency pairs are going to involve the currencies on this list. Having said that the major currencies have large economies in common, I thought it might be interesting to look at a list of the world's largest economies. And this is a list by GDP using figures from the IMF. Top of the pile, we have the US there, we're the world's largest economy, but we do have a number of countries on this list that weren't part of our list of the most traded currencies. So that would be China and India and Brazil and South Korea and Russia. And these are normally labeled emerging currencies. There are various reasons that may have contributed to them not seeing such high turnover in the Forex market, ranging from things such as political instability, or the currency not being truly free-floated in some cases. But if we look at which are the politically stable countries on this list, we can see that our major currencies do crop up in kind of quite predictable fashion. What is quite interesting is that Switzerland doesn't make this top 11. And in fact, the Chinese renminbi here, in terms of turnover, is actually not too far behind the Swiss franc based on that most recent Triennial Central Bank Survey. And the major Forex pairs all involve the US dollar. So each pair that's in the list of the majors, one of the currencies in each pair is the US dollar. They are the most heavily traded currency pairs, and as a consequence, get tighter spreads than pairs that aren't the major Forex pairs, and they are the most liquid Forex pairs in the Forex market, which is a very liquid market to start with. So these are what I would consider to be the majors. They are in order of volume traded, and these are the 6 most traded currency pairs in the world. Number 1, euro dollar. Second, dollar yen. Third place, we have cable. Fourth, the Aussie dollar against the US dollar. Fifth, the US dollar against the Canadian dollar, often just called dollar CAD, or the US dollar against the loonie. And then in 6th, we have dollar Swiss. I hope you enjoyed this video looking at the cost of holding a Forex position and at the major currency pairs. If you did, please hit the thumbs up button and give us a like. Or why not share your thoughts with us on the subject by sending us a message in the comments section. We do read each one. But that's all for now from me, Peter Martin, and Trading 212. Thanks for watching. I'll see you next time. Goodbye.